Welcome back to the Deep Dive. It's Tuesday, January 27, 2026. And, if you were scrolling through your news feed this morning,
Past all the usual noise.
exactly, past the sports, the politics, you might have missed a headline that, it really dictates how the physical world moves. We're talking about RTX.
Formerly Raytheon Technologies.
And the numbers they dropped this morning are, well, big doesn't even begin to cover it. We're looking at sales flirting with $90 billion for 2025.
It's a leviathan of a number. But honestly, just looking at RTX as a company with a stock ticker, you kind of miss the point. When you operate at this scale, what was it, $88.6 billion in sales? You're not just a business anymore. You're a proxy for the entire global industrial machine.
Right. You're the engine on the wing of the plane you flew in on, and you're the missile defense system you see on the news.
Exactly.
And that's what I want to get into. How does a giant this big actually move? Because, usually when companies get this massive, they get slow, they turn into dinosaurs.
Yeah.
But looking at this report, that really doesn't seem to be the case here.
Far from it. This report is a snapshot of what some economists are starting to call the industrial supercycle. We spent, the last decade obsessed with software, with apps, the digital economy.
Sure.
But 2025 really showed us that the physical autonomy, the hardware, the steel, the propulsion, it's roaring back.
So it's the revenge of the atoms over the bits.
In a way, yeah. So we're going to tear apart this earnings report, not to bore you with accounting, but to see what it tells us about travel, war, and the supply chain crisis that never seems to go away.
Okay, let's start with the raw score. For the full year 2025, RTX pulled in $88.6 billion. That's up 10% from 2024. Q4 alone was $24.2 billion, up 12%. Double-digit growth for a company this big it's just rare. But I have to play devil's advocate here for a second. Inflation's been a headache for everyone. Is this just RTX charging more for the same old widgets?
That's the cynical question you have to ask. But the report, it has a specific metric that kind of counters that. It's called organic sales growth. They posted 11% organic growth for the year.
So organic growth, that's one of those terms. So you hear it in boardrooms all the time.
Yeah.
Cut through the noise for us. Why does that prove they aren't just, price gouging?
Right. That's the key question. Think of organic growth as like a truth serum for the corporate world. Any CEO can make revenue look bigger by buying a competitor or, like you said, just jacking up prices to match inflation.
Sure.
But organic strips all of that away. It cuts out the sugar rush from acquisitions, the noise from currency fluctuations. It really measures the muscle mass. It tells you, are we physically selling more units than last year?
I see.
And an 11% jump means the demand for the actual hardware, the engines, the avionics, the radars, it's just skyrocketed.
So people are actually buying more stuff. It's volume, not just value.
Precisely. And that demand is, it's coming from everywhere.
Before we get to where that's coming from, I need to clear up one thing that always confuses me in these reports. They have the GAAP EPS at, $4.96, and then the adjusted EPS at $6.29. That's a huge difference.
It is.
Is this just some accounting magic to make the bonuses look bigger?
It can definitely feel that way, but there is a logic to it. Think of it like this. Imagine you bought a beautiful historic house. But because it has that historical designation, you're allowed to write off a part of the house's value every year on your taxes as depreciation.
Okay, so on paper, my house is losing value.
Right. But in reality, you're renting it out and you're making a fortune in cash. The GAAP number is like your tax return. It includes that paper loss, the depreciation, and all the costs of buying the house in the first place.
Okay.
For RTX, that's the acquisition accounting adjustments. It's a $1.15 per share hit. That's mostly just phantom math related to their past mergers.
So the adjusted number is the rent money.
Exactly. The adjusted EPS of $6.29 tells you how much cash the operations are actually generating for shareholders once you ignore all that historical accounting stuff. And that number is up 10% year over year.
Speaking of cash, let's talk about the bank account. Because you can sell $1 billion in engines, but if you don't collect the check, you go bust.
Yeah. Cash is the lifeblood, and RTX is pumping a lot of it. They reported free cash flow of $7.9 billion for 2025.
$7.9 billion.
Yep, and that's up $3.4 billion from the year before.
Wow, so that's a huge jump in cash on hand. What do they even do with $8 billion in loose change?
Well, they don't stuff it under a mattress. This is, discretionary firepower. They use it to pay dividends, sure. But more importantly, they use it for stock buybacks, which they did a lot of, and for R&D.
Right.
When you're building the next generation of fighter jet engines or hybrid electric propulsion, you need billions in cash up front. This $7.9 billion is their war chest for the future.
Okay, so the past year was great. They have cash. But stock prices are always about the future, not the past. I'm looking at the sales figures, but does this momentum actually hold up, or was 2025 just some lucky bounce?
That is the right question, and the answer isn't in the sales column, it's in the backlog.
The backlog.
I don't know if you caught the total backlog figure in the report.
I saw a lot of billions, but I don't think I circled that specific one. What are we talking about?
$268 billion.
Wait, say that again?
$268 billion.
With a B. That's absurd. That's nearly 3 times their annual revenue.
It's a number that should stop you in your tracks. I mean, basically, if the entire sales team at RTX went on vacation for the next 3 years and didn't sell a single screw, the factories would still be running at full capacity.
Wow.
I like to call the backlog future revenue insurance. It just removes all the guesswork.
But what's actually in that backlog? Is it just, promises, or is it real hardware orders?
Oh, it's very real. It breaks down into about $161 billion for commercial aerospace.
Okay.
And $107 billion for defense.
Let's unpack the commercial side first.
Yeah.
161 billion. That's got to be mostly airlines, right?
It is. Think about the Airbus A320neo family. It's the workhorse of modern travel. RTX, through Pratt & Whitney, makes the engines. Through Collins, they make the avionics, the interiors. Airlines are just desperate for these planes.
Yeah.
The travel demand post-pandemic didn't just bounce back. It exploded, and it stayed high. So every time an airline orders a new fleet of jets, that backlog number just ticks up.
And the defense side, $107 billion seems incredibly high, especially with the budget fights we always hear about in Washington.
It reflects the reality of the geopolitical map. I mean, just look at the news. Eastern Europe, the Middle East, the Pacific. Nations aren't just talking about security anymore. They're buying it.
Right.
That $107 billion represents Patriot missile batteries, GMT interceptors, AMRAAM missiles. These are, unfortunately, consumption items in modern conflict. Countries are realizing their stockpiles were way too low, and they're placing massive orders to refill them.
So the backlog is essentially a list of the world's anxieties and its travel plans.
That's a poetic, if slightly depressing way to put it, but yes. It proves that RTX is just cemented into the infrastructure of the next decade. You can't just switch suppliers for a fighter jet engine overnight.
Let's break down the 3 pillars of this empire. You mentioned Pratt and Whitney and Collins. Let's start with Collins Aerospace. To me, they always seem like the guys who make the seats and the screens. The unglamorous stuff.
Unglamorous, maybe, but incredibly profitable. Collins posted operating profit growth of 27% in Q4.
How do you grow profit 27% when your sales only grew 3%? That math feels weird.
It's all about what they sold. The magic word here is aftermarket.
Ah, so maintenance.
Maintenance, spare parts, retrofits. Exactly. Here's the context. New planes are delayed. Boeing and Airbus are struggling to build them fast enough. So what do airlines do? They fly the old planes longer.
Like driving a used car until the wheels fall off.
Exactly. But unlike your used car, you can't just tape the bumper back on a Boeing 777. You have to buy certified parts. You need expensive maintenance. And Collins is the only one who can sell you those parts.
Got it.
The margins on a spare part are so much higher than the margins on a brand new seat installed at the factory. So the aging global fleet is actually a gold mine for Collins.
So delays at Boeing and Airbus are actually good news for Collins' bottom line.
Ironically, yes.
I also noticed they sold off something called Simmons Precision Products.
Is that significant?
It's just housekeeping. Pruning the tree, RTX is so huge, and sometimes they find they own a business unit that just doesn't fit the high-tech narrative anymore. Selling it off for $1.3 billion just keeps them focused and adds to that cash pile we were talking about.
Okay, let's move to the star of the show. Pratt & Whitney, the engine guys. Q4 sales up 25%. That is explosive.
It is the standout performance, and it's fired on 2 fronts. Commercial original equipment, so new engines for airliners, was like 28%, but the military side was up 30%.
A 30% jump in military sales? Is that all F-35s? A huge chunk of it, yes. The F-135 engine powers the F-35 Lightning II. It's the most expensive, most advanced weapons program in history. Production volumes are ramping. But they also mention sustainment on the F-100 engine, which powers older jets like the F-15 and F-16.
So again, it's that mix of building the new shiny toys and just keeping the old war horses flying.
Correct. And remember, an engine isn't a one-time sale. You sell the engine, and then you have a 20-year relationship servicing it. That's the business model.
Finally, the third pillar, Raytheon, the defense business, up 7%.
This is the direct correlation to the news cycle. We saw growth in the Patriot system, the GEMT missile, and the Tomahawk cruise missile.
These are names that have been around for decades. I mean, the Tomahawk has been around since the 80s.
It has, but it keeps getting updated. And the demand now is all about volume. For a long time, defense was about R&D designing the next cool thing. Now it's about industrial capacity. Can you build 500 missiles a year instead of 50? That's what drove that 7% growth. It wasn't just new tech, it was more stuff.
Okay, we've painted a pretty rosy picture here. Almost $90 billion in sales, massive backlog, cash flowing. But I want to talk about the cautionary statement. Every earnings report has risks buried in the fine print. And for RTX, there's a specific phrase that keeps popping up: powder metal.
Ah, yeah, the powdered metal issue, you're right to pick up on that.
It sounds technical.
It is. It sounds like a heavy metal band, but it's really a metallurgical nightmare for them.
Break it down for us. What is the actual problem?
It involves a rare condition in the powdered metal that's used to make high-pressure turbine disks. These are the spinning parts deep inside the engine that operate at incredible temperatures and stress. Specifically, in the GTF, the geared turbofan engines that power the Airbus A320neo.
Is it a safety risk?
If it's ignored, yes, it could lead to cracks. So Pratt & Whitney has to inspect the entire fleet, and this isn't just, pop the hood and look. This is take the engine off the wing, disassemble it, analyze the metal, and replace parts if needed.
That sounds wildly expensive.
It's astronomical. It costs billions in compensation to airlines because their planes are grounded. But the bigger cost is opportunity cost. Every mechanic and engineer working on fixing these old engines is one less person building a new engine. It's just a massive drag on the company's efficiency.
It's like trying to run a marathon while carrying a backpack full of rocks.
And you have to fix the rocks while you run. It puts a huge damper on that 25% sales growth at Pratt. Without this issue, those numbers would be even crazier.
Are there other rocks in the backpack? The report mentioned tariffs.
Tariffs are the macroeconomic headwinds. RTX is a global company. They move parts across borders constantly. Higher tariffs mean higher costs for raw materials like aluminum and titanium. Just eats into the margins. It's a reminder that even a defense giant isn't immune to trade wars.
I also want to touch on the easy comps thing. Q4 2025 looks amazing, but was Q4 2024 just terrible?
You have a sharp eye. In Q4 2024, Pratt took a $157 million hit because a customer went bankrupt. That depressed their earnings last year. So when you compare this year to last year, the jump looks bigger than it naturally would be.
A low bar effect.
Exactly. It doesn't mean 2025 wasn't good, but you have to take the percentages with a little grain of salt.
Okay, so looking ahead, we're in 2026. They've given guidance for the year. Sales between $92 and $93 billion. Another year of growth.
Yes, projecting 5% to 6% organic growth.
That's about half the growth rate of 2025. Is that a warning sign?
I don't think so. I think it's stabilization. You can't grow at 11% forever when you're this big. But 5% growth on a $90 billion base is still adding nearly $5 billion in new revenue. That's like adding a whole Fortune 500 company to your top line in a single year.
The CEO, Chris Calio, said something that struck me. He said the focus for 2026 is executing on our backlog.
That is the code word for the year. Execution.
Translating from CEO speak, what does that actually mean on the ground?
It means the sales team has done their job. They sold $268 billion worth of stuff. Now, the problem shifts to the factory floor. The problem is logistics.
It's the I Love Lucy chocolate factory scenario.
Exactly. The orders are coming down the conveyor belt faster than they can wrap them. The challenge for 2026 isn't finding customers. It's finding skilled labor. It's getting titanium from suppliers who are also squeezed. It's managing the powder metal inspections without destroying the flight schedules of major airlines.
So the risk for 2026 isn't will people buy it, it's can they build it?
And that brings us to the real tension of this whole deep dive. We're looking at a company that is undeniably successful financially, but they are operating in a world where supply chains are just incredibly fragile.
And that fragility matters because of what they build.
Right. If a toy company has a supply chain issue, kids don't get their dolls for Christmas. It's sad, but life goes on. If RTX has a supply chain bottleneck, fighter jets don't fly. Commercial airliners stay grounded. The global infrastructure starts to creak.
It feels like there's a national security angle to this, too.
There absolutely is, and that's the thought I want to leave you with. We celebrate these massive backlogs as a sign of business health. Look, $268 billion in orders, the stock is safe.
Right.
But from a strategic perspective, a backlog that big is also a warning sign.
How so?
It means demand is vastly outstripping the industrial capacity of the West to produce. We've put all our eggs in one very large, very impressive basket. If RTX stumbles, if that powder metal issue gets worse, or if they can't hire enough engineers, it's not just an earnings miss, it's a vulnerability.
We're reliant on them to execute.
We are. The free world relies on this specific supply chain for its mobility and for its defense. So the question for 2026 isn't just can they build it fast enough to make Wall Street happy? It's can they build it fast enough to keep the world safe?
That puts a very different spin on an earnings report. It's not just math. It's the machinery of the modern world.
It certainly is.
We will be watching that execution metric closely all year.
Oh,
Thank you for walking us through this maze of billions in powdered metal.
always a pleasure.
And thanks to you for listening. Next time you see a plane overhead, just remember the massive industrial machine and the $268 billion waiting list that keeps it up there. We'll see you in the next deep dive.